to me, it's, understanding the business, and that's probably one of the most important things, and being able to understand accounting, their books, how things are put together, and be able to spot things that, don't seem right, and work with the business owner to try and get them right.
And like any other business owner, they're trying to watch their expenses too. So if they, and I can guarantee that those policies probably get really freaking expensive.
I've been around since 1992, and I've I've been involved in all the major storm events since that time, all over and everywhere, from Florida, Texas, California. I actually worked on the Deepwater Horizon claims too, which is the same type of work, but of course it wasn't working for or against insurance companies. It was a federal project, but it was the same type of work.
Here's how much you're going to pay for this one. Here's how much you're going to pay for this one. Here's how much you're going to pay for this one. And guess what everybody chooses?
Sometimes there's what they call, in some policies, claim preparation coverage, which will pay for some or all of my bills, so it doesn't come out of the insured's pocket or anyone else's.
Really?
Now it's not all, like in the better policies they'll have that, and they've had typically they'll have a subsection in the deck page, and it'll have limits from $5,000, but I've seen them, and I've actually been paid on one up to $100,000 of coverage.
And frankly, a lot of us get a bad rap. A lot of people say, well, you're just taking advantage of the insurance company. You're just inflating the claim. You're just doing all these things, when all we're doing is, and I'm really happy to have someone who does something completely different than, say, what we do in a way, but you're still advocating for the policyholder. You're still looking out for the little person, because and I know that we're going up against a multi-billion-dollar industry.
I mean, that's one of the things that I enjoy the most about it, working on the policyholder side, is working with public adjusters.
What's up, advocates, and welcome back to another episode of the Claims Game podcast. Today, I've got a very, very special guest, someone extremely unique that you've never heard from before. But before we get into that, make sure you check us out online. Go on www.commercialclaimsadvocate.com, and we've got all kinds of things happening. We are growing like crazy. We've got all kinds of new events that we're putting on. We've got our Miami meetup coming up on November 19th that we'd really love for you to come out to. We've got sponsors. We've got speakers. It's going to be incredible. And then we've got a ton of meetups coming up all over the country coming up in 2022. We've also got our course. We've got some video courses that we're going to line up for you to go ahead and you could actually purchase online and you could watch at your own leisure. We've got consulting that we're really putting together that you're going to be hearing about very, very soon. And also, of course, you could, check out this podcast on YouTube, on Spotify, on iTunes, and on Google Podcasts. So pretty much wherever you normally get your podcasts, you can catch the Claims Game podcast. And also, of course, you could follow us on LinkedIn, Instagram, and Facebook. Today, we've got a forensic accountant. That's right, a forensic accountant. We've never had somebody like this before, and it's really, really exciting that we've got that. We've got Bruce Smith. Bruce Smith is the owner of his own company. His name is Bruce D. Smith, and the name of his company is BDS, his initials. Bruce Smith is not only a certified CPA, he is a CFF, which is a certified financial forensics accountant, and a CFE, which is a certified fraud examiner. I mean, the guy knows his stuff. He has been in forensic accounting. He has been a forensic CPA since 1992. Since actually before that, but he was working for the other side for a year and a half, and he decided to start his own business as a forensic accountant, as an advocate for the policyholder. That's why I love this interview or this conversation so much, because he is not that much different than a public adjuster. He just focuses on business interruption. So for those of you that don't know a lot about business interruption, this is the episode to understand exactly what goes on behind the scenes of a large commercial loss like hotels, grocery stores, and big time businesses on the business interruption that takes place from the date of loss until the actual building is put back together again. He started in 1992 in Miami, Florida after Hurricane Andrew, and he's been doing it ever since. This guy's got a ton of experience. He's an expert as well, an expert witness when it comes to being in trial, and the guy just knows his stuff, and he really breaks down the process of what a forensic CPA does. So just one of my favorite. I know I say it all the time, but this one was really good because it's so unique. It's not a public adjuster. It's not a roofer. It's not a contractor. This is a forensic CPA, a forensic accountant. I want you to make sure that you could find Bruce D. Smith on his website. It's bdscpacfe.com. I know a little bit, but you could see that. You'll see it in the show notes. You could also find Bruce on LinkedIn. That's how I first heard about him. He actually sent me a message on LinkedIn, and after having a conversation with him, I knew I had to have him on the podcast because he's so unique. So you can find him on LinkedIn, and I'm sure you could find him on Facebook as well. So please, please, please enjoy this incredible and unique podcast experience here on the Claims Game podcast with my new friend, Bruce Smith.
Welcome to the Claims Game podcast with Vince Perry. Get all the tips you need from insurance claim advocates and professionals and grow your public adjusting career to the next level. And now the commercial claims advocate, Vince Perry.
All right, very excited today. We have a very unique guest, someone that actually sent me a message on LinkedIn. We went back and forth, spoke over the phone, and I was very intrigued by what Mr. Bruce Smith did for a living. So we don't have our typical roofer or public adjuster or contractor or whatever. We've got somebody who's very unique in this insurance claim industry that we are in. Mr. Bruce Smith is a forensic CPA. So for those of you that have large losses or anything like that, and you've got a lot of contents to look after, or you've got a lot of ALE to look after, or you just got business interruption, and they need to make up for all this money as a result of a massive loss. He just told me, Bruce, you told me about a $150 million claim. This is where we're going to get that information. So I am actually more interested than any of our guests, Bruce.
Thanks.
I'm going to be asking questions just so that I can educate myself, because I tell people all the time, this podcast is not about them. This is about me. I want to learn more from the people that I'm talking to. So, good. Bruce, why don't you, thank you for coming on. First of all, I really appreciate you taking the time to do it, even though I had to cancel on you twice because I'm a terrible, terrible person. Actually, what happened today, I had 2 umpire inspections, Bruce, and one of them was at 2 o'clock, and we're talking now at 4 o'clock, and he asked to move it back to like 3:30, 4 o'clock, and I told him, no, cannot do it. I've got an appointment with Bruce that I've already canceled on him twice. If I do this now, he will never speak to me again.
Not true, but I appreciate it.
So, Bruce, I guess if you could just let the audience know, tell us a little bit about yourself and tell us a little bit about what you do, and then we could just take it from there.
Okay, I'll just give you a little bit of background for me. I'm going to go way back. I'll pretend I'm almost like in a deposition here. I graduated from the University of Wisconsin a long time ago, back in 1976. And then I worked as a controller, financial controller for a retail company in Wisconsin for about 12 years. And then I got a job offer. Actually, I'd met my wife on a business trip down in Florida, so she ended up coming with me up to Wisconsin for 4 years and couldn't stand the weather. And so we moved back down to Florida, and I got a job with a Big Four accounting firm at that time, Arthur Young, which became Ernst & Young. And I worked in auditing. I later found out about a job in my business that a professor that I knew at the university down here said, he knew I wasn't that interested in auditing. It's kind of boring. So he said, I know a person that is in the insurance industry that does accounting work. And I'm going, I've never heard anything like that. So I interviewed with the person, he hired me, and he does the type of work that I do now. But it was strictly on the insurance company side. My clients, or his clients, actually were all the major insurance carriers, property insurance carriers. So I worked for him for about a year and a half and decided, well, I think I can do this on my own. So this was about beginning of 1992. I jumped out on my own, knew a couple people, had a family, and I was going, oh my God, what did I do? And but what ended up happening, I don't know if a lot of your listeners were around at the time, but in August of '92, Hurricane Andrew came through South Florida, where I'm located. And so I ended up meeting a lot of people that probably would have taken me years to meet, because they had all the, I'll call them heavy hitters down there, because it was such a large storm. And it got me going. So I've had my own little shop that I've been around since 1992, and I've been involved in all the major storm events since that time, all over and everywhere, from Florida, Texas, California. I actually worked on the Deepwater Horizon claims too, which is the same type of work, but of course it wasn't working for or against insurance companies. It was a federal project, but it was the same type of work.
So you said when you started, you were working for a company, or you were working for someone that had only carrier work, insurance company side work. How long did you work with that person?
About 1.5 years, 2 years.
And what made you, did you say that because you had a family and stuff, what made you make the switch?
I made the switch because, well, sometimes you have bosses that you don't care for too much, but that was part of it. And part of it was that I just felt that I understood it well enough to possibly break out on my own. And I've always wanted to be a business owner. I'm more of an entrepreneurial person than a worker bee. And I made the break.
Well, why didn't you stay on that side? What made you want to, I guess probably the bad taste in your mouth from your boss?
Yes.
Don't worry. Nobody's listening. Nobody's listening. Okay. It's just you and me. You can say whatever you want.
Right. And I won't mention any names, but in general, not that there aren't good insurance people. There are a lot. I have a lot of friends that are on the insurance company side that I think are really decent people. But there's enough people that aren't decent people, that aren't really out to help the policyholders, get what they deserve. And that's all you can ask, is for them to get what they deserve under the coverage. And I just saw a lot of people that weren't like that, and it bothered me. I didn't feel comfortable doing what I was doing. So
that's awesome. I mean, because this is, it's what I'm an advocate. Most of the people that listen to the show are public adjusters or contractors, and all of us basically advocate for the policyholder as well. And frankly, a lot of us get a bad rap. A lot of people say, well, you're just taking advantage of the insurance company. You're just inflating the claim. You're just doing all these things, when all we're doing is, and I'm really happy to have someone who does something completely different than, say, what we do in a way, but you're still advocating for the policyholder. You're still looking out for the little person, because and I know that we're going up against a multi-billion-dollar industry.
Yeah.
We're going against a huge industry that they've got all the heavy hitters on their side. And it's nice that so quickly in your earlier in your career, you realize, no, this is what I want to do. I want to advocate for the policyholder. I want to help them. Was there like a specific instance in your first 1.5 years there where you were just like, nope, this is not the side I want to be on. I need to go to this side?
I don't think it was just a continual trend, I'll call it almost, of just always trying to find ways to lower the claim, to I'll say cheat the policyholder. And sometimes in business interruption work, there's always a gray area, because you're doing projections of what the insured would have done as far as profit wise, had the loss occurrence not occurred. And so there's always a little bit of gray room. And what the insurance company does, or they typically hire, some have their in-house accountants, forensic CPAs, but a lot of them, there's a lot of big, I'll call them insurance company forensic accounting firms that they'll hire. And what they typically do is, in that gray area, they'll always, most of the time, I won't say always, no one does something always, take the lower part of that gray area. And what I try and do is get the upper part of the gray area. I'm not going to go outside of that. That doesn't do anyone any good. It causes a claim to be delayed or denied, and you don't want that to happen either. You try and get what the insured should get under the policy coverage. And So there's always that's where the argument is. The big argument is it at the lower part of the gray area or the higher part of the gray area? And whoever does the most amount of work and has the most supporting evidence is the one who wins the battle.
That's awesome. I mean, that's the exact same thing that public adjusters do. It's like the exact same thing. As the insurance company comes with their lowball estimate that they're just leaving out all these little things. I tell people all the time when they call me, should I hire a public adjuster? Why is it that they're going to get me more money? And it's simple little things that I'm sure you see all the time. And for us, it's usually in regards to the build back. They'll put one coat of paint instead of 2 coats of paint. They'll detach and reset this baseboard instead of replacing it. They'll detach and reset a countertop instead of replacing it. All those little things that you see where sometimes it looks like, well, they included everything. Like, no, they didn't. They decided to sort of take out these little things here and there. And I know some people that do both sides, that they work carrier work as well. And the carrier will send them an email and say, hey, fix the depreciation amount here on this one. Make it 10 years instead of 5 years. Take out this overhead and profit over here. Take out this line item here. And then, we'll work it like that. When the person that wrote the estimate put it in there because it needed to be in there, but the carrier sent the estimate back, sent them an email saying, no, I need you to take this out, make a change here, make a change there, and this is what we're going to pay.
Yep. It's exact same thing.
That's awesome.
You just have to work hard and everything that they're entitled to, the policyholder's entitled to, you have to put it out there because insurance companies, even though they say that it's, their policyholder, that's not really true.
They're a business, like I tell people, they're a business like anything else, and their biggest expenses are always going to be, obviously employee payroll and claim payouts. Those are always going to be the two, and they're always going to try to find one way or the other to try to, And then the other thing is actually, I'm sure you would know, they get audited at the end of every year, and their claim payouts need to be less than their premiums earned. It's just very simple. Sure. So it's just math. So I kind of know the answer to this question, but I think just maybe for some people that want to sort of understand the difference, what's the difference between a CPA and a forensic CPA?
Okay, I'll call it since you called it, a normal CPA. Typically, whatever that means. I consider that someone who does typical accounting type of work, which is mostly tax work. That's what most CPAs do that aren't in this type of work, or they go into, I'll call it bookkeeping, but it's a little more sophisticated than that. A forensic accountant like myself, they'll deal in work with, my particular area is in insurance companies, but there's also other fields where they do like divorce work. Working on divorces, if they have to figure out what one of the spouses is making, or they'll do personal injury work, looking at losses that way. But we typically dig a little bit deeper into the books and are able to gather all different types of information, put it together and fit it in with the policy. I'm talking about the type of work I do with the insurance company, because it's a combination. My work is accounting, of course, but also it has to fit in with the contract, the insurance contract. So it's a little more specific, a little more detail oriented.
And could you elaborate on that a little bit? Why is it more detail oriented? What is it like? Can you give me an example?
Well, typically it depends on the client I'm working for, the insured. A lot of them are very unsophisticated as far as bookkeeping. There might be mom and pop type of places. And then there's other ones, I've worked for, like the large claim that you mentioned in the beginning, big governmental agency where they have, audited books and, everything has to be perfect. So the typical client for me might be a hotel. I do a lot of hotels, especially like in Texas. Where some of them are very sophisticated, again, if they have a brand name like a Hilton or a Marriott or something like that. Other ones are small independent hotels, so I have to piece together, almost do their books for them, ask them for the right information, and then kind of piece it together to fit in with the policy. So it's a little more, I guess that's what I mean by detail-oriented. I have to grab this and that and put them together and mix them up and present a claim
And how much more detailed is it than just having, let's say, Hilton? Obviously, they've got their own accountants. They've got their own people. They've got all these, I'm sure they've got a huge staff that just looks after all these things. Oh, how much different is it that when you come in and you actually present the claim to the insurance company, that as opposed to them just, hey, calling their accountant or calling their entire accounting department, hey, we need this, this, and that, please submit to the insurance company, and that's it?
Yeah, well, typically those people are really busy people, and they're willing to pay for a service like mine because they've got enough on their plate anyways. And they don't really, sometimes they have risk managers at their hotels if it's a really big place. Other times they don't. And the ones that don't, they really don't understand insurance, and they really don't understand business interruption insurance more than, they know if they have property damage, they know to get the invoices, and they'll hire a public adjuster or whatever. But for business interruption, a lot of them either don't want to deal with it, or they just don't understand it.
Again, it's just funny. I'm sorry I keep going back to this, but every time you're talking about it, it's so close to sort of what we do. It's like hiring a public adjuster is not necessary. You can go ahead and do it yourself if you want. But, we know, like how the insurance policy reads. We know how to review the insurance policy. You look at business interruption, exactly what you could present to the insurance company, what maybe you can't present to the insurance company, what they're going to pay for, what they're not going to pay for. And same thing goes for public adjusters. We're always looking at all these specific things to make sure that we could present it to the insurance company in a way that they'll review it clearly and make the payment that we need them to make to the client so that they're actually left whole,
Yep. And also, another thing too is that a reason, I guess a selling point that I use a lot, and it's true, is that because I've done so many of these and been around so long, I've developed a lot of relationships with the other side where we can work together. I mean, once in a while you run into a bad person, that's difficult, but in general, we kind of all know each other, and we can work as much together as possible and get things done. So,
but that's the way to do it, right?
Yeah, that's what you want, really.
Why go in adversarially when you could go in and actually have a nice, good, positive relationship? Let's sit down, let's figure this out, and let's get them paid.
Right. Yeah. I mean, you're not going to agree on everything, but if you can agree on, 90% of the things, you're way ahead of the game.
So I want to clarify. So mainly what you work in is business interruption, right?
Correct.
I think business interruption is something that a lot of people are, it's not a gray area, but I think it's a little bit of a confusing section of the policy. It's something that is very difficult for at least all the claims that I've handled. Business interruption is something I don't really want to have much to do with unless it's like a home and it's like a lease agreement I provide. As far as a home is concerned, like additional living expenses, I could just provide a lease agreement. They pay that. Very simple. If it's a small business where it doesn't get too complicated or they just lease the space, again, I provide a lease agreement. Like that's sort of my limit of what I do with business interruption. I guess I don't think I'm trying to think of a specific question, but maybe if you could think like that $150 million claim, maybe if you want to, if you could elaborate a little bit about sort of the intricate details, some of the things, what are some of the most important documents that you need to gather in order to present this business interruption claim accordingly so that it's paid in full?
Well, that large claim I was talking about, I don't know if that's the best one to talk about because it's kind of a unique claim.
You can talk about a different one. I would like to simplify the process, your process, for those people that don't really understand how complicated business interruption can get. So I want you to simplify a complicated subject.
Okay. All right. The typical business interruption claim is, this is what I do from my standpoint. The first thing I want to look at, or I request, is the policy and the declaration page for the business interruption claim. And I like to see actually the whole policy because sometimes there's other things in the policy that might relate to the business income or business interruption claim that's not titled business interruption. For instance, they might have in a lot of policies extra expenses included with business income, business interruption losses, but a lot of times there's a separate area for it. So that's one reason I like to see it. Sometimes there's what they call, in some policies, claim preparation coverage, which will pay for some or all of my bills, so it doesn't come out of the insured's pocket or anyone else's.
Really?
Yeah. Now it's not all like in the better policies they'll have that, and they've had typically they'll have a subsection in the deck page, and it will have limits of from 5,000, but I've seen them, and I've actually been paid on one up to $100,000 of coverage that they'll have to pay someone like myself or an architect or someone. But they won't pay, unfortunately for you guys, they won't pay the public adjuster's fee, but but people like
We're
myself.
used to that. We're used to that. That's okay. So that's pretty cool. So they have a claim preparation. Sometimes that's probably one of the first things that you look at.
Right. I look at that, and then the coverage too. I'll tell you. I'll give you a little bit of a story of why I make sure that's the first thing I do is get that policy and deck page. I was brought in on a claim in Texas, a big warehouse. It was like I don't know if you call it an ice house, but where they stored frozen food. It was a gigantic building. They had roof damage there, and it was a big claim. And they had an attorney involved and a public adjuster, and it was actually in Harlingen, Texas. And so I went down there, and after they hired me and said, "We want you." I met the owner and walked around, and huge holes in the roof, and so they said, "We got to get you going right away." So they showed me the building, the big warehouse, and got me working on it. I requested all the information, did my whole thing, a lot of time, traveling back and forth a few times. And the end result was that particular location wasn't covered under business interruption coverage.
Wasn't covered.
Was not covered. That location 1, building 5, location 1, where the damage was, did not have business interruption coverage. And there was an attorney. I mean, I always took it for granted that, the public adjuster and or the attorney would know that before they even hired me. And I don't trust anybody anymore because.
Wait a minute. You worked the entire claim and then you found out at the end?
Yep. So
Did the attorney pay you? Did the attorney pay you anyway? I hope so.
He paid me some, not all of it. I took a hit. I mean, he's a good guy, and he's given me business after that, so I hate it. But it was just embarrassing. Plus, it angered me. I didn't like it. I don't like being put in a position like that.
Yeah, I mean, I'd be lying if I told you, mistakes has never happened to me. I mean, mistakes happen. That's a pretty big one, but I mean, it happens. At least you learn, right? It'll never happen again.
I learned my lesson. So. Going back to that, so I look at the policy and deck page and make sure I read it carefully and look what the coverages are and make sure that the location is covered under business interruption, not just property coverage. And then what I do, I get an idea I like to talk to the business owner or the public adjuster or the attorney, whoever's involved with the client, and have the client there and tell me about his business, what they do, how they earn money, how they were affected by the damage. And then I also talk about what type of records they keep. And then I send out a request for information. And with my business, like we were discussing a little bit earlier, I'm very rarely called into a location. I really don't have to see the property damage like an adjuster does. I just have to know what type of books they have. I have to know about what kind of business they do, what they might have lost. And I can handle everything electronically.
The request for information, you send that to the insured? Yes.
The insured, or sometimes the public adjuster likes me to send it to them and have that connection. A lot of times they don't want to be involved at all, and they just do it.
I wouldn't. No, I wouldn't even want to be involved at all. Okay, so that's pretty cool. So you obviously review the policy, then you have a conversation, sort of like a screening of the insured, find out a little bit about the business and things that go on, and then you request for information. What are some of the things that you're usually requesting that really just sort of helps you put together and map out that sort of story, I guess, as to what's going on?
Okay. I mean, every business is a little bit unique, but all the businesses I request certain records. And typically, for all the businesses, I'll request tax returns. A lot of times people they're a little bit paranoid about giving their tax returns away because they've got their, federal IDs or social security numbers on there. But I always tell them, it doesn't go anyplace, and everything that once the claims are done and I'm sure there's not going to be a lawsuit or something like that, I destroy the tax returns. I shred them and they're gone. or if they want them back, I'll mail them back. I don't really care. So I always request at least a couple of years of tax returns, profit and loss statements if they do generate them. Some companies, they do it once a year so they can prepare, so their accountant can prepare a tax return. Some will do them monthly, which I hope they do. And the same thing, I'll request a couple of years of those. I also request payroll records because a lot of the policies, business interruption policies.
Payable records?
Payroll, I'm sorry.
Oh, payroll. Okay.
Yes. A lot of the policies, for instance, let's use State Farm, they'll pay for payroll for the first 90 days, ordinary payroll. So if they pay their employees, their clerks, whatever, and they have to incur the expense, they can't just say, well, we normally pay these people. We laid them off, but we want the money anyways. They won't pay. You have to actually incur the expense for the insurance company to pay them. So State Farm.
So you said they'll pay the first 90 days and then it has to be incurred after that?
No. Yeah, they have to actually, let's say the date of loss is today, September 9th. If they continue to pay their employees during the next 90 days, they'll pay for that expense. But if they say, sorry, everybody, there's a fire here, we got to lay you off. And then you put a claim in for that payroll saying, well, this was at our normal expenses. They'll say, well, did you pay them? Yeah. And you say, no. Well, why would we pay you if you're not going to pay them? So it makes sense. But the reason why I request it is because. Yeah,
but it sucks. Maybe they didn't know that they could get that money and they just laid off, 100 workers or something.
Yeah. I mean, they could keep their people under, using, of course, as an example again, 90 days. After that, they cut you off. But they will pay, that's what they call ordinary payroll. That's typically your non-management, non-officer. People like the management and the officer, they'll pay after that their policy up to like 12 months. And
okay, gotcha. So the 90 days is only like leadership, like people who are in the management level?
No, it's the other way around. 90 days is for the people that are not management, not officers, not owners. They'll pay them up to 90 days if you pay them. If you don't, you won't collect. But the owners don't keep on paying. If they normally draw a salary, they'll pay them up to the end of the period of restoration, whatever that is.
And I can imagine, God, 90 days, that's not enough. I can imagine for a lot of the claims that you're dealing with, it's a year, 2 years of restoration, of litigation, of just the whole process.
Well, what you have to do then is not buy State Farm policy. You have to buy something. You can buy the coverage. But a lot of people,
I was going to ask you, what's the loophole, Bruce? But no, we don't have to get into that. Well, State Farm policy, that's a whole other podcast. That's a whole other conversation that we could get into.
Sure.
Tax returns, P&L, payroll, anything else?
Let's see, payroll.
Or if there was anything you'd want to expand on that, I don't want to cut you short.
No, I think that's the main reason I like to know who the management is and who the normal, clerks, whoever are, because of the coverage issue there. So I get that for, maybe a couple, it depends how long the period of restoration is going to be. Should I explain what the period of restoration is? That's a term that needs a business interruption policy.
Yeah, I mean, for those of you who don't know, period of restoration is just the time it takes from the date of loss until the property is completely restored.
Perfect.
Right. I better know that.
Yeah.
What was I going to ask you? Payroll.
I was going to expand on that a little bit. In the business interruption policy, they'll pay for the time period, the period of restoration. And the period of restoration, again, is not totally a black and white issue.
Whatsoever.
It's a very black, gray area, and it's really almost a theoretical period because.
Yeah, and I want people to understand, it's like I just said, it's from the time of the date of loss until the date that the work is complete, that the building or home also is actually put back. So I think what you're talking about, correct me if I'm wrong, there is no black and white, because if you're negotiating these things while the loss is being investigated, while the loss is being built back while the loss is still in litigation. Like there's just so many things that you really never know sometimes when that period restoration is actually going to end. I deal with that just with homeowners claims and small commercial claims where it's, hey, look, here's what we're expecting. Here's what the GC is saying. It's going to take them this much time. We need to allot for that amount of time. Right.
Yeah. That's exactly right. And in the business interruption area, it's the period of restoration is why there's so many. That's probably one of the biggest argument areas first of all, it's one of the biggest areas of argument. And the reason why it's so important is that the value of the business interruption is very dependent on how long a time period you're measuring the loss over with. And if you have a period of restoration where it's very undetermined, a lot of times the insurance company will argue, well, you didn't move with due dispatch and diligence, I guess. Sure. Those are legal terms. You didn't work as hard as possible. We feel that it should have taken 6 months if you really would have done it correctly, and then it takes a year. So that's where you have a lot of arguments, and if things do go to like appraisal, we're not supposed to argue that, but but it ends up being part of the argument anyways because.
Appraisal, you mentioned that. You said the payroll, that first 90-day thing, you said that's just like kind of like a State Farm thing? It's like unique, or is that pretty spread around all policies?
I won't say it's unique. I would say 50-50. Some have no limitations like that. Some will have 60 days without pay the ordinary payroll. So it goes on. I guess the better the policy, less you'll see that type of limitation because you're usually paying more. It's covered. It's covered, and they don't give anything away. I mean, you're paying for it somewhere. So,
of course. Okay, so let's go. When do you get into the nitty gritty of like, I know you got the profit and loss. Do you look at any like cash balance statements at all?
Not
really, right?
No, not that much. The only time I ever get involved in that is once in a while I'll get a claim from an attorney where there's they have like a financial motive type of claim. It's really not that much of insurance. Well, it can be if it's employee dishonesty claims, but in general, I don't get involved in looking what their cash balances are that much, unless it's a financial motive type of claim. When trying to prove someone burned the business down, that type of thing.
Right. Does the profit and loss really tell you everything, or do you have to ever go to like through credit card statements and actual like statements and line items, and like you're gonna have to get, or do you have the Insured do that, where if you look at something, hey, here are all my issues, like my bookkeeper, like every month when I give him my books to give me my P&L and my cash balance, every freaking month it's an email. All right, here's all the ones that I don't understand. Please clarify. Is that basically what you do?
Right. I tell them to do that. I don't want to get involved in that. It takes too much time, and that's something that I don't want to go back and forth every 2 minutes and say, what's this? Like you make your bookkeeper do. I don't want to do that.
He makes me do.
Oh yeah, right. He makes you do. That's correct.
So you go tax returns, P&L, payroll. It all seems pretty simple up to now. When does it start to get a little complicated, and when do you start to fall into like the gray area of some things?
Okay. Well, let's go again with the hotel business. There's other things I asked from them. I'm going to get into a little more specific type of documents for this particular business. They have a report that a lot of them purchased from an organization called the Star Group, STR. And what they do, they have all kinds of statistics on hotel occupancy, average daily rate, revenue per available room, things like that. And it has the people that subscribe to that have to take their statistical information and present it to this group. And so what you have, they divide it into subgroups and present a whole bunch. I guess I'll simplify it. They give you information where you can compare yourself to similar hotels. So in a case, let's say if there's a fire in a hotel and what I'll typically do is request those reports and see what other hotels are doing around that area, and say, and what they do, they show, let's say if your hotel normally, I'm going to make a number up, does $100 per day, and your competitor does $120 per day. Well, we can take what they did and discount it by 20% and say this is what your hotel would have done had it been open during that time period. Does that make sense?
Because it's 20% less?
Right. So if over a long period of time before the loss, if you're always doing 20% less than the other hotel, and that other hotel is still open during the time you're closed, you could say, well, you probably would have continued that trend, 20% less. So you look at that, what they're doing during, let's say if they were doing after the date of loss $80, well, you take 20% off that and say you were doing whatever that'd be, $64 per night.
What about just looking at the previous year at that exact same time?
Well, you can do that too. What I also, there's two of the ways that they suggest, the American Institute of CPAs business valuation group, they use what they call before and after method to project what the business would have done. That's typically what that means is looking over the last couple of years, comparing year to year, and maybe it's going to 20%. So you can project the continuing revenue at a 20% over the prior year.
That would be the reason why you can't really go back to the previous year, because if they're improving their business, if they're in a workflow, what's the word I'm looking for? If they're increasing in profits, then
you want to see if there's any trends in the business. If you just look at last year's, you might be helping yourself, you might be hurting yourself, and so that's why you typically want to request at least a couple of years of financials before the date of loss to see if there is some kind of trend there. And the other method is the market method, which is using those star type of reports to see what the market's doing around you. And sometimes where the market method doesn't work, and this is because of the way the policies are typically written out, is, let's say if you have a major disaster in the area, like a big hurricane, and it knocks out, everybody around, except maybe a couple hotels that are your competitors. And what's going to happen to those couple hotels that are open? They're going to be booming. So if you use the market data, you're going to say, well, hey, if I would have been open, I would have been doing this. Well, in the policies, in the business interruption policies, there's a little paragraph they have that says you can't. I don't have the exact language here, but basically you can't do that. You got to look at what you were doing before. You can't say because you weren't open and you're in this boom time, you can't use your competitors. The market.
You see what I'm saying? Multi-billion-dollar industry with very smart people. They're not stupid. They know what they're doing.
Well, you know what? That's a recent change they made to the policies within the last. I'm going to say within the last 5 or 6 years. Before it was not like that, and people did that, and the insurance companies were stuck. What are they going to say? It's not in the policies, so the tie goes to the insured.
What are some of the things that you're looking out for? What else? What other things? I guess if we could go back to the hotel example, is there like an occupancy rate that you look after too, and how in depth do you get?
Again, you look at not only the occupancy rate, but you look at the average daily rate, and without making it too confusing, what they use with for instance, a star report used and most hotel owners use, they look at what they call the RevPAR is, the revenue per available room. And that's a combination of the occupancy and what they can charge. And they kind of play with those. The owners play with those. They try and charge as much as they can while keeping the occupancy up. So that's what the metric that we typically look at is the revenue per available room.
What is your role in the appraisal process?
Pretty much what my role is normally, but I appraise the business. A lot of times they'll get turned over to me from somebody else. A lot of times I'm I'll call it the adjuster accountant. I'm the accountant during the adjusting period and also the appraiser. And I've also been an umpire too.
Do you ever I guess you probably do. You go up against, obviously, the insurance company's forensic accountant, and you guys go back and forth and you figure it out, right?
Yep. I mean, that's mostly who I ended up dealing with during the time. Usually the adjusters on both sides kind of stand back and just, they take their accountant's report, and of course the public adjuster, the plaintiff attorney, takes my report. And
so it's not as complicated as I thought it was. Because I guess if we can go to, like, say, a grocery store,
right.
I mean, it's going to be relatively the same process.
Yeah, I mean, it is. It's pretty much the same process. It's just a matter of, to me, it's, understanding the business, and that's probably one of the most important things, and being able to understand accounting, their books, how
Right.
things are put together, and be able to spot things that, don't seem right, and work with the business owner to try and get them right. And
Do you find that a lot of the business interruption policy language, do you find it, I'm sure, I could probably answer my own question, that I'm sure since 92 it's only gotten more difficult. But do you find a lot of things, like a lot of unfair things, like, let's say, where they took out that thing in the policy, which is not really unfair. It makes sense, I mean, if that hotel is booming now. But do you find any other things that are just like make your job a little bit difficult, and you have to just tell the client, hey, look, we can't get this, we can't get that. This is the policy you purchased. What are some of the things?
I think one of the biggest, and I don't know if I'm answering your question directly, but one of the biggest, I would say, misunderstood concepts in, well, not only business interruption, but also in property, is coinsurance. It's a big shocker, because sometimes people don't buy enough insurance and they have a coinsurance penalty. And a lot of times they're collecting 20 or 30% of what their loss is because of that coinsurance. And I don't
Wait a minute. So I know exactly what coinsurance is. For those of you that don't know, you have to have at least 80% coverage of what your property is worth. This might be, right. I hope people don't think, whoa, this guy's supposed to be an expert. That affects your business interruption as well? Or is it the value of business interruption that you have that has to be a certain amount?
Right. It's the same. It's the same thing. It's separate. But
it's separate. Okay, just making sure.
So they look at what they do is they look from the policy period through 12 months forward, what your profitability would have been.
Gotcha.
And you have to make sure you have enough insurance to cover. They have different percentages, but in your case, you were talking 80%. You have to have 80% of that in order to get paid 100%.
Gotcha. Okay. Phew. Okay. I just thought I thought you were telling me that the property damage affected the business loss interruption. So again, just to explain, so that we could actually teach people on this thing, is if you have to have minimum 80%. So let's say the property is worth $100,000, you have to have at least $80,000. If you have let's just give an example, $72,000, which would be 10% less than what is actually required. Now, any payment that goes towards what I'm talking about is property damage will be deducted 10%. So if that $100,000 property, let's say you get a claim that's paid $50,000, they're not going to pay you $50,000. They're going to pay you $45,000. And the same goes with business interruption, huh?
Exactly. So I don't think a lot of agents that sell these policies, I don't think they explain those things to the.
Don't get me started. My mom, to change the subject real quick. My mom still lives in Miami. I go to Miami probably once or twice a month. I obviously go see her and I stay with her. And she's like, hey, the insurance company sent me this. Can you take a look at it? I said, sure. $9,000 property damage limit. $9,000 coverage A dwelling limit. Now, it's a condo, but it's a 3-bedroom condo. It's probably 2,500 square feet. It's a pretty decent-sized condo. $9,000. And I called the lady. I said, what's going on with this? Well, this is the policy that she chose. And I'm like, she didn't choose this. You just gave it to her. You gave her 3 options that doesn't even contain a deck page, doesn't have any wording in the policy. It just literally says, here's how much you're going to pay. Maybe they put the limit in there. Who knows? Maybe they did, maybe they didn't. But mainly it's, here's how much you're going to pay for this one. Here's how much you're going to pay for this one. Here's how much you're going to pay for this one. And guess what everybody chooses? So I called them and I'm just like, you need to change this. You need to change this now. I need a limit of, I don't know, 50, 75, $100,000. Because again, it's a condo, but yeah, don't get me started. Don't get me started because then when you contact them, they blame you. Yeah. Well, you chose this. And it's like, yeah, but we don't know what we're doing. I mean, thank God you and we could read a policy like that and we know exactly, where it lacks. But normal Joe Schmo they don't know how to read it.
No, they don't. I mean, it's not the most interesting reading. So most people, put it in the file cabinet and that's it.
No, and like the insurance company, you're dealing with probably some mega business owners. And like any other business owner, they're trying to watch their expenses too. So if and I can guarantee that those policies probably get really freaking expensive.
They do.
So if they could cut a little bit on their insurance, then they don't realize what they're actually cutting out when an actual loss does occur, and it hurts them in the long run. You ever had somebody call you, looked at the policy, and you just say you're not covered? Is business interruption required?
No. It's an optional coverage, and a lot of, I forgot what storm it was. It might have been Irma, which went through all of Florida. But I know a lot of the hotels in the Keys didn't have business interruption insurance. Now, who wouldn't have? I mean, that's like flat land there. I mean, if any kind of water, or they don't have flood insurance. I mean, God.
How's it work with flood insurance? How different is it for you? I mean, I could explain to it's a pretty big difference for us, but what's the difference for you?
Well, I mean, if it's a covered event, then there is no difference to me. But
gotcha.
And a lot of times,
matter whether it's flood, whether it's wind, it doesn't matter.
No. I mean, again, it depends. Again, that's why I ask for the policy all the time to read that. If it is in there, if there is some kind of difference. In general, if it says it's a covered cause of loss, there might be a difference in deductibles, things like that. In most business interruption policies, the only deductible, quote unquote deductible, is they have a 72-hour wait period. They won't cover you for the first 3 days, and that's since I've been started business, that's a fairly recent event too, or a change in the policy. During Hurricane Andrew, which was my first hurricane I worked under, they had no 72-hour wait period. So they had everyone and their brother filing a claim for a few days, got 2 zillion claims, small claims, but from the insurance company's perspective, it killed them.
Really?
Yeah. I mean, for 3 days for every business that was around, they all filed claims, and not that they were huge, but when you add them all together.
How do you separate for those businesses or hotels that actually end up reopening, let's say for at least just to generate some income, but still not the same? You just take the difference of what is normally at this time to now they're reopen? Or is it once they reopen, like that's it? Is that period of restoration, is that not considered a period of restoration anymore?
No, that's always an argument too. I mean, to me, I always take the position that until the hotel is back to its pre-loss condition, it has the ability to do the same kind of business. Not that they're doing the same amount of business, but they have the ability to do the same kind of business. That's when it ends, once they have that ability to do it.
But you have to deduct the amount if they're partially open.
Yes, you do. Yes, okay. You do. Now, what you can, with most ISO policies, they will have an extended business income period, which after the period of restoration ends, they'll give you, a lot of them have 30, 60 days to ramp up your business. In other words, to get your business back up to where it should be. Because, you were closed, so people forget about you. You have to advertise maybe again a bit more. And so it gives you that extra time to spend the money to get your business back up to normal. So a lot of times that's optional coverage that you have to buy. Like I say, in the ISO policies, which probably 80% of the businesses that I'm working on business interruption claims are those policies. They call them a CP 0030 and 0032. One has extra expense, one does not. But those policies typically have, they both have 72-hour waiting periods, and they both have extended periods of indemnity,
That's what
which
it's
are
called.
36 days. Yeah.
That's what it's called. Do you find that a lot of your clients end up running out of the business income insurance, like the coverage that they have?
Not a lot of them. I mean, typically I don't know the word run out. I guess what do you mean by run out? That
They just reached their limit, and
they reach them.
they haven't finished doing whatever needs to be done. There is a limit, right?
Not always.
Okay.
Some have actual loss sustained, which means they'll pay whatever it is until the end of the period of restoration. So there isn't a limit. Other times there is, and there have been times where they've exceeded the limit and they're out of luck, basically. Sorry.
What's your largest business interruption claim?
The largest one was that one in Puerto Rico.
$150 million.
$150 million. And that was actually, I got a call from the public adjuster who I was working with down in Puerto Rico. We finished the one. There were two losses. Both Hurricane Irma and Hurricane Maria hit the island about 2 weeks apart. And we finished the Hurricane Maria one, excuse me, and that was $150 million. So this guy calls me up like 2 days ago and said, we got to finish the Hurricane Irma one. I go, what? I haven't looked like that in like 4 years. So I got to go dig back into it and kind of figure out what I did at the time. Because we presented them a claim, but then now they say we didn't present a claim and they want to deny it. And so we got to go fight on that again now. So, but it was a lot of fun. And, we dealt with, we had I don't know what they call them, the president, the governor. I mean, everyone was involved in that. So a lot of really high level people, and it was some very smart people got to work with.
I think I know the public adjuster you were working with. I'm sure I know him well.
Yeah.
Is it Jack?
Yeah. Well, it's a funny story about, I won't mention his name because I don't know if you'll ask him to or not, but he's
Jack,
kind of a guy from the South. And he happened to know someone who sold books to libraries in Puerto Rico. And he happened to know the person that was one of the bookseller knew this guy who was working at this big utility in Puerto Rico. And they got him hooked up. So he got this kind of rednecky guy going down to Puerto Rico, doesn't know a bit of Spanish. And he got the job.
I just know the claim you're talking about. I just can't pinpoint. I mean, I guarantee I know the person that you're talking about. What was it? Man, I want to ask you two questions. So let me get to my first question.
Okay.
Working. Insurance company Forensic Cpa versus the insured's Forensic Cpa. What is that like? What is that whole thing, that whole communication like? And again, I know you probably try not to make it adversarial. And I'm not looking for a story where it's adversarial, but maybe if you've got a story of just sort of that process and what it's like when you're presenting your facts and they're countering and you're countering back and you guys are trying to come to an agreement.
Yeah. Well, let's see. I'm trying to think of one claim that I just finished up on not too long ago was actually an appraisal that we worked on, and it was, I believe it was a Hurricane Irma up in Daytona Beach, business interruption claim on a hotel, and without getting into too much of the details, we both had good arguments. I mean, he had a good argument. I understood exactly what he was saying. And I had a good argument too, I thought. And, it was an appraisal and we had an umpire, and luckily the umpire thought I had a better argument. I mean, he went not all the way towards me, but he went more towards my number.
So what are some of the common disagreements that you have to deal with?
Well, in this particular claim, it had to do with which way was the best way to project the loss. Was like I described before, the market type of philosophy, or looking at the before and after. The period of restoration was a big item because the insurance company paid them. I guess they had to put on a new roof on the hotel, and they felt that after the a certain amount of time after they put the roof on, the period of restoration was over. And from our argument, from the information I got from the adjuster and the contractors that were involved, there was a lot of work that had to be done. It was not right on the ocean. There was a lot of work, a lot of damage that was done. And it was like this was like about a year and a half or almost 2 years after the storm. So there was a lot of subsequent damage that just happened by just not repairing it all that time.
So you're probably, especially with that period of restoration, you're in communication with the contractors and their intent to repair and their certificate of completion and all that stuff that you could present so that you could at least, figure out that timeline.
Yeah, I mean, to me that's huge. That I have to have that kind of information to argue. If I don't have it, I'm kind of sunk. I have to, if either the property owner or the public adjuster or attorney doesn't get me that information, I have to go with what the insurance company says, and I don't like to do that because I know they always, work towards the short side of it.
What's been your experience working with public adjusters?
I've had great luck with it. I mean, that's one of the things that I enjoy the most about it. Working on the policy owner side is working with public adjusters. Most of I don't even know if I can think of a bad guy that I've worked with.
I did not. Can you just please declare that I did not pay you to say that?
Yeah, right. No, but really, I go to a lot of the seminars and different conferences with public adjusters, and it's great people, really are. I actually have I'm working my son into my business too. He's an attorney now, but he didn't like the law practice, so he's actually studying to be a CPA, and he helps me out a bit too. And I just tell him, you're going to love it. It's a great group of people, friendly, nice. Everyone works together, and we're doing a good thing.
Are PAs your number one referral source?
Yeah.
Would it be attorneys?
No, I think public adjusters are.
Yeah.
I mean, they're all a good group. I mean, most of the plaintiff attorneys, again, there's a few that aren't the greatest, but in general, great group of people. Great. I mean, it really makes it fun. To me, my job isn't a job. I mean, once in a while there's some drudgery in any business, but in general, I enjoy what I'm doing.
So I could figure out a way that the audience could actually, hire you, call you, and use your services and stuff. I know you talk about that in some policies have the claim preparation section where the insurance company will actually pay you, but there are the times where they don't. Do you do an hourly rate? Do you charge a flat fee to the insured? How does that work?
Both, and I try and work. I always talk, if I'm working with a public adjuster, depending if they don't have, let's just say for the sake of argument, they don't have the coverage in the policy. I always, I'm very upfront and talk about it, discuss it, and whatever works out best for both of us, that's what I do.
Gotcha. Yeah, because that's always something we're always just like, we don't want to bill too much to the insured.
Yeah.
But these people could afford it.
Yeah.
It's funny. I remember Andrew like it was yesterday. I don't want to tell you my age, I guess, but I was young. I was still a kid, and I remember not having to go back to school for 3 months. And I remember driving outside. I remember sitting in my living room, and that's when we used to put tape on the windows. Right?
Yeah, right. Like it makes a big difference.
Yeah, exactly. Until we realized that it doesn't matter. And I just remember looking at those winds. But you know what? I was in my mom we still live in the same condo in Fontainebleau area, which is like Flagler and 87th Avenue. Are you familiar with that area?
Sure. Mm-hmm.
And the destruction wasn't too bad. Lots of trees went down, but because our power lines are underground, and that was a wind event. That really was not a rain event.
No.
We didn't lose power.
Yep, that was great.
All our friends and family were coming over. So what we were doing, I just remember like it was yesterday. We were taking styrofoam cups, filling them up with water, and just freezing them. We had a big freezer, and people were just like coming. All our friends and family were coming over just for ice.
Yeah, that was
crazy.
That was the first. I mean, I moved down to Florida in end of 88, 89, and it was.
You move from the cold weather, right? You were in Wisconsin, and then you get hit by probably one of the hardest hurricanes. I mean, in the 21st century.
Yeah, it was I went down to the Kendall area and that area.
Ooh, Kendall got ripped. I mean, that's
Oh,
right. That's literally right on top of Homestead, which got the brunt of it.
yeah, I couldn't believe it. I've never seen anything like that before. So
Did you stay home or did you evacuate?
no, we stayed home. We were I have relatives that live north of me and some relatives that live a little bit south of me. And for some reason we moved south, which wasn't the smartest idea, but we didn't move that far south. But we stayed in the general area. I mean, we almost getting away from Andrew, but I think there was one hurricane that we came about 2 seconds away from like trying to leave. But then we saw what the highways looked like and went, what are we doing? You know?
What part of Kendall?
No, I wasn't in Kendall. I was, well, I went.
When you lived in Kendall, what part of Kendall did you live in?
I misunderstood you. I never lived in. I went down to Kendall to do work.
Okay.
And actually work down there with the guys with the adjusters a little bit, and that's when I saw that. I can't remember the name. Country Walk, I think it was the name of the complex.
Yeah, Kendall got hit pretty bad. I mean that definitely scared Miami straight. I mean after that, I mean I think before that the worst storm was Hugo or something like that. And then Andrew came around. I mean Andrew just ripped it apart. And then there was some storms in 2004. There was Irma, and Irma really wasn't. I mean there was Wilma Katrina. Katrina was actually a lot harder than anybody thought it would be. I think it was supposed to be a Category 1. I think it made landfall as a 2, and then we all know what happened in New Orleans after that. And then we had Irma about 10 or 12 years after that. People think it's funny because I came into this business. Obviously, you and I deal with a lot more large loss. I deal with large loss as well, but I know that's pretty much. I mean, that's basically you deal with hotel chains and stuff like that. But I mean, there's really not really. I got into this business because, hey, look at this. We had a hurricane in 2004. We had a hurricane in 2005. We're going to get hurricanes every year. But people don't see that to specific areas, it's really, especially like in Florida and maybe like even Katrina, now Louisiana, look, that's what? That's 15 years, 16 years. People think it's every year, but it's not every year. It's really pretty spread out. I mean, it happens eventually, but it's not like an everyday thing.
No, it seemed like it, back when you mentioned before Hurricane Jean and Francis in 2004 or 5 or so in that area. I mean, it seemed like it's going to happen every year. I mean, it was just like storm after storm after storm. And, it all gets down to, in any business, just as far as your own personal finances, take it easy. It's not going to be every year. You can't sit there and
you can't just bank on it.
Yeah.
What are some of the trends that you see, Bruce? I guess maybe specific to your area or just in the insurance claims industry in general? Do you find it harder? Or are you finding it just a lot more difficult?
You know what? Knock on wood or whatever. My business has never been better. I think a lot of it's just being around. Going to network, meet people, talk to people. And I think in any business, that's a big part of your business. You have to not shut yourself in and not, work is important and you have to do your work and you have to do it well. But you also have to get out and meet people.
Well, I'm really happy you sent me a message, and I'm really, because you're just unique, I mean, there's not too many people that do what you do, especially for the policyholder. Are you going to come to the Tampa or the Miami meetup?
When is it? Tell me when it is.
Tampa meetup is next Friday. That's going to be September 17th. And then the Miami meetup is going to be Friday, November 19th. So 2 months after that. Okay. I think we're expecting about 100 people, maybe a little more here for Tampa. And we're going to have, I think, over 100 easy in the Miami meetup. And it's basically a room, I would say probably about 60% public adjusters. Then the rest are going to be contractors and attorneys.
Awesome. So now I'll help you sell your thing here. Where is it in Tampa?
So I have figured out, this sounds weird, and I'm going to have to make a video just to explain why, but Dave & Buster's has been the best place that we have held this event. So The Tampa one, you could just literally Google search Dave & Buster's Tampa. There's only one.
Okay.
And then there's really only one Dave & Buster's in Miami, at least the big location, which is in Dolphin Mall. And then they've got a room for over 180 people, for up to 180 people. They've got a stage. They provide food. They provide one drink ticket, and I have enough space where I could actually even have people set up some booths. So we have sponsors now. Would love for you to sponsor if you are interested. I think, honestly, I wouldn't be surprised if you get a ton of views on this podcast. And I'm going to put this in the podcast, by the way, just because, again, I mean, you don't really, I'd have to probably do some research, but I can't. 14 years I've been doing this, and you're probably the first forensic accountant that I met that's actually on our side.
I'll tell you a story that kind of backs up what you're saying. Is I have a attorney friend of mine who does this kind of work, and he just changed firms, and he said to me, he said, you're one of the few people in this business, and he's been around a long time too. So in a way, I am unique. I hate to use that, but there aren't that many people that do what I do on this side of the fence.
You're an advocate. You advocate for the like we do,
Right.
And I think I think you could really make a splash even after 92, 2002. How many years? That's a long time you've been doing this. But I think
you can meet new people.
I don't think it's ever too late to make a splash, and I'd love to have you involved. I'd love to have you involved in the meetups because I think it'd be very beneficial for you. I think it would also add a little bit more credibility to our meetups as well. And so we have the one in Tampa, and I'd love for you to come out to the Miami one. I think that would be fantastic.
Absolutely, I will. I
promise.
promise.
Bruce, let me just promote you real quick for those who are still listening. Mr. Bruce Smith. I don't know why I keep saying Mr. Bruce Smith, but Bruce Smith, his company is BDS. So, and it's his initials, Bruce D. Smith. Can I say your phone number? Because I see it on the website.
Go ahead.
Bruce's phone number is 954-755-7981. You could also find him on LinkedIn, Bruce Smith, Forensic Cpa. And I would go, and the website, I'm sorry, is BDS. This is too complicated, Bruce. We need to do something about this.
I know. Okay, you got to help me on that.
Here we go. BDS CPACFE. I guess BDS CPA.
Right, you got that.
And then CFE.com. What does CFF and CFE stand for?
Okay, so I'll go to my website. For BDS is my initials, CPA is an accountant, and CFE is Certified Fraud Examiner. So those are the three things. And the CFF you just mentioned is Certified in Financial Forensics.
Gotcha.
It's a designation from the AICPA.
I have to remember, I do the introduction separately. I need to remember to put your credentials. What are your credentials besides all these letters? Are there any other credentials that I need to know about?
I think that covers it.
Because I didn't ask you in the beginning. I apologize for that.
No, I'm a CPA, of course, and certified in financial forensics, and also a certified fraud examiner, which is kind of an interesting route too.
I'd like to ask you about that real quick if you still got some time.
Sure.
So wait, CFF is certified
in financial forensics,
and then CFE is certified.
Certified fraud examiner.
Right. What's up with that?
That's a group that in Austin, Texas, that started, I think, in the 1990s. It's a group of people a really interesting group of people that are a mixture of accountants, police, FBI people, anyone involved in cybersecurity. It's all having to do with fraud. Everyone who's involved in fraud or potential fraudulent acts, all kinds of stuff, embezzlement. So anyways, you have to take a big exam, almost not as difficult as a CPA exam, but it's very inclusive. It has law, psychology, interrogation, all kinds of interesting things.
How often are you called upon as an expert?
I've been called on. I mean, I'm always an expert, right?
Right.
But I've been
You know what I
called, I've been called as an expert probably about 10 or 15 times.
Gotcha.
Yeah. And, been in a bunch of depositions and, it's all great. All good.
Have you ever experienced any fraud on the insurance company side or potential for it?
Yeah, there's actually a group now, and I can't remember.
APA?
You got it.
Are you a part of them? You should be.
I know. You're right. I should be. I will be.
Yeah. I'm a part of them. They're a fantastic organization. I strongly recommend it. Yeah, they do a lot. They do a lot for us. I mean, people think insurance fraud for some reason. They're always thinking policyholder. They think that the insurance company does no wrong, but I mean, some of the losses that they don't pay and some of the things that they take away, probably from some of your reports or some of the other forensic CPAs or from the engineers, you'll be surprised at what they do behind the scenes.
No, I remember that old case with State Farm. I think it was a couple of adjusters there that turned on State Farm a few years back. I mean, it was a huge, gigantic lawsuit. I mean, it had to do with engineering reports.
Yeah.
I think,
in New Jersey, it was bad for Hurricane Sandy. They were fraudulently changing engineering reports.
Yeah, that seems to be a big area where they, a lot of money involved.
It's crazy. Like, we don't have enough to fight.
Yeah, right.
All right, Bruce, again, thank you so much for your time. I really appreciate it. That was fantastic. That was extremely unique, something very different that we've never had on the show. So I really, really do thank you and appreciate the time. And I hope to actually meet you in person here pretty soon, maybe the next month or two.
You will. Thank you.
All right, Bruce. Thanks a lot, man. Have a good day.
Okay. Thank you.
Bye.
Okay.